What if the story you were told about your money was a lie? They told friends and family they were off on a duck hunt. Then, under the cover of night, they boarded a private train car, sealed and with the curtains drawn, their identities a secret even from the crew. Their destination? A private island off the coast of Georgia, Jekyll Island, a luxury retreat for the ultra-wealthy, families like the Morgans and Rockefellers. But they weren't there to hunt any ducks. For the next 9 days, this small group, a handful of the world's most dominant bankers and politicians, met behind locked doors. They were about to draw up the blueprint for the most powerful financial institution on the planet. They were about to take control of America's money itself. This is the story of the Jekyll Island meeting, the secret that explains why the dollar in your wallet is a ghost of what it once was. He became a one-man central bank. In the early 1900s, America's financial system was a house of cards. The country had thousands of banks, but no central authority to back them up when things went wrong. This created a terrifyingly predictable cycle of boom and bust. The breaking point was the panic of 1907. It started with a failed stock market gamble, but the fear spread like wildfire. People, terrified of losing their life savings, rushed to the banks to pull out their cash. It was a death spiral. The banks didn't have everyone's money just sitting there. They'd loaned it out. One by one, they started to collapse. The stock market crashed by nearly 50%. Businesses went bankrupt, and unemployment shot through the roof. And the plan couldn't look like it came from them. In 1908, President Theodore Roosevelt created the National Monetary Commission to figure out how to prevent future panics. But for the bankers who had just been forced to save the day, the 1907 panic wasn't just a crisis. It was an opportunity. They saw a path to gaining permanent control, and they were determined to take it. The man leading that commission was Senator Nelson Aldrich. He was a powerful Republican, deeply tied to banking interests, and also happened to be John D. Rockefeller Jr.'s father-in-law. After a tour of Europe's central banks, Aldrich knew what he wanted: a similar system for America, one that was controlled by bankers. But there was a huge problem. Americans hated the idea of a central bank. They saw it as a tool for a corrupt financial elite, a money trust, to enrich themselves. It was a system designed by bankers, for bankers. In November 1910, Aldrich gathered his team. It included Henry Davison, a senior partner at J.P. Morgan & Company, Frank Vanderlip, president of the Rockefeller-backed National City Bank, and Paul Warburg, a German-born banking expert who had been pushing for a European-style central bank in America for years. A few other key figures, like Benjamin Strong and A. Piatt Andrew, were there too, a small group representing an almost unbelievable concentration of the world's wealth. For over a week, using only first names to maintain secrecy, they hammered out a plan. What they created was a blueprint for what they called a National Reserve Association. It was a central bank in everything but name. The plan born on Jekyll Island, which became known as the Aldrich Plan, was a masterclass in deception. It proposed a series of regional reserve banks to create the illusion of a decentralized system, so it wouldn't look like all the power was in New York. In reality, these branches would be controlled by the member banks themselves, with the biggest banks getting the most say. The creature from Jekyll Island was alive. Because he was so openly tied to Wall Street, the Aldrich Plan was dead on arrival in Congress. But the Jekyll Island crew didn't just give up. They waited. Their moment came in 1912 with the election of President Woodrow Wilson. The Democrats, now in charge, were also pushing for banking reform with their own bill. And this is where the genius of the scheme comes in. While publicly trashing the failed Aldrich Plan, the new bill, the Glass-Owen bill, was shockingly similar in its technical design. The bankers' plan was simply repackaged with a new, friendlier name, the Federal Reserve Act. To get it passed, President Wilson insisted on a genuine compromise, a Federal Reserve Board in Washington, appointed by the president to provide public oversight. That staggering decline isn't an accident. It is the direct result of the system designed in secret on that island. The official story is that it created an elastic currency that could expand or shrink to prevent panics, and a lender of last resort to save struggling banks. But in doing so, it unleashed something far more destructive on the average person, a system of permanent currency devaluation. Before 1913, the dollar's value was tied to gold. The Federal Reserve System began to break that link. The Fed was given the power to create money from nothing. It does this by buying government debt, which floods the banking system with new cash that can then be loaned out many times over. This is the very engine of inflation. Think about it. When the supply of anything goes up, its value goes down. The same is true for money. Every new dollar the Fed creates dilutes the purchasing power of the dollars already in your pocket. This isn't a side effect, it's a feature. It works like a hidden tax, silently transferring wealth away from savers to debtors. And the biggest debtor of all is the government. And let us know in the comments, do you think the Fed is a stabilizing force or the greatest financial power grab in history? It's the operating system of our economy today. It was a plan born in secrecy, designed by the world's most powerful bankers to consolidate their control. They promised us stability, but what they built was a machine that systematically makes your money worth less. They didn't really solve financial panics. They just centralized the power to manage them. In the process, they handed the government the ultimate tool for confiscating wealth without ever sending you a bill: inflation. From the Great Depression to the 2008 crisis and beyond, the legacy of that meeting is all around us. It's a system that privatizes the profits and socializes the losses, all while telling you it's for your own good. The story of Jekyll Island is the story of how your money was engineered to fail.